Welcome to the Explainer. Okay, let's talk about Intel. They're a giant in the tech world, right? But they've been fighting their way back from a really tough spot. So today, we're going to dig into their latest earnings report and ask the big question. Is this comeback story for real, or is it just a flash in the pan?
So, the top line news? It's good. Intel just posted another solid quarter. And get this, it's the fourth one in a row where they've beaten what everyone expected. That's a pretty strong positive trend, you have to admit.
Okay, but here's the thing. Beating expectations is great. But is it a full-blown comeback? That's a different story. So let's get past the headlines, right? We're going to look at what these numbers actually mean for the company's health and where they're headed.
All right, first things first, let's break down the numbers. We're going to look at how Intel's third quarter really stacked up. No spin, just the hard data. And this chart, wow, it really paints a picture of their recovery. You see that sharp dip back in late 2024? I mean, that was a huge loss. But look at what's happened since. That line is just steadily climbing back up, back into the black. It's a really powerful visual of just how far they've come from a really, really tough spot. Okay, before we dive into the nitty-gritty numbers, there's one key term you're going to hear a lot, so let's just quickly define it: gross margin. So what is it? Basically, it's the profit a company makes on the stuff it sells, before all the other expenses. A higher gross margin is a great sign. It means they're getting more profitable for every single dollar of product they move. So first up, let's talk revenue. Intel's revenue was up 2.8% compared to this time last year. Now, that's not just growth. It's also better than what they themselves predicted. And that, right there, is a sign of really solid execution. And remember that gross margin we just talked about? Well, Intel's hit 40%. Now, that might not sound like a lot, but it is a massive 22-point jump from last year. Seriously, this is a huge deal. It proves they're not just selling more chips, they're making a lot more profit on every single one. And all of this flows right down to a number that investors really care about: earnings per share, or EPS. You know, the company's profit for each share of stock. Well, it jumped by 69 cents compared to last year. That's a direct result of that stronger revenue and, you guessed it, that much, much healthier margin.
So you gotta ask, what's behind these strong numbers? Well, it's no accident. The answer is just two letters: AI. Yep, artificial intelligence. It's the engine that's completely reshaping the tech industry, and Intel is right in the middle of it.
And this quote from Intel's own report just says it all, doesn't it? The AI boom isn't some separate niche thing. No, it is directly fueling demand for Intel's bread and butter, their Core x86 processors. You know, the chips that are the basic building blocks for pretty much every computer and server out there. And we're seeing this demand hit their two biggest divisions. On one hand, you've got the massive data centers. They're snapping up Intel's powerful Xeon server chips to run all that AI in the cloud. And then, on the other hand, you have us, the everyday user. We're starting to see the rise of the AI PC, laptops and desktops with special chips just for AI. And that's pushing people to upgrade their computers. And if you look at the revenue breakdown, you can see this playing out. Both parts of the business are strong for sure, but the PC market, that's still Intel's biggest moneymaker this quarter, pulling in $7.6 billion. But keep an eye on that data center and AI business. That's a super critical engine for where they're headed. You know, a good quarter is fantastic, but a real lasting comeback, that needs a rock-solid financial foundation. So beyond just these quarterly results, it looks like Intel is playing the long game. They're making some really smart strategic moves to shore up their finances for the future. So how are they doing that? Well, they're making their balance sheet stronger by cashing in on some assets, like their stake in Altera, and they're also getting a boost from smart investments like Mobileye. And this is really important. They're building key partnerships, not just with big industry players, but with the US government too. So yeah, the Q3 results, they paint a pretty rosy picture. But the story's not quite that simple. To really get the full picture, we have to look ahead at what Intel itself is saying is coming next. And that brings us right back to the million-dollar question, the one everyone is asking. Is the turnaround done? Is Intel officially back and out of the woods? Well, if you look at their own forecast for the next quarter, the company is definitely tapping the brakes a bit. They're signaling a much more cautious tone. It seems like that incredible momentum we saw in Q3 isn't expected to keep up at the same pace. And this table, well, it really lays it all out in black and white. Just look at the difference between the Q3 results they just posted and what they're telling us to expect in Q4. It's a tale of two quarters, really. Those fantastic year-over-year gains we were just celebrating, they're expecting them to reverse. Revenue, gross margin, earnings per share, they're all projected to be down. So, what's the big takeaway here? It's pretty clear. Intel is absolutely showing real, tangible signs of progress. But this journey, it's not over, not by a long shot. The road ahead is definitely challenging. And the key question, the one everything hinges on, is this. Can that massive tailwind from the AI boom provide enough lift to carry them through the very real headwinds we see coming? How they answer that question won't just define Intel's future, it could change the entire landscape of computing.